Hey everyone, recently I came across a very interesting query. One of my friends asked me, Sahil, I want to invest my money but I can't take the volatility of stock market. I'm looking for fixed income options. But since FD has a very low interest rate, what is your view on some PSU stocks that have a dividend yield of more than 10%? And they are looking undervalued with very low PE ratio? That was a very interesting question. There are many PSUs in India offering a dividend yield of more than 10%. For example, Indian Oil Corporation has a latest dividend yield of 11.5%. Steel Authority of India has a dividend yield of 10.6%. NMDC has a dividend yield of 12.7%. Wow, that's a hell lot of dividend, isn't it? In fact, I was looking at Vedanta and it is showing a dividend yield of 19.1%. That's more than the annual return of many stocks. And that too a fixed return. And when I look at the valuation of these PSUs, IOCL had a P ratio of 5.2. Steel Authority has a P ratio of 3.6. NMDC has a P ratio of 4.4. Coal India has a P ratio of 5.9. That looks pretty undervalued, isn't it? Clearly it looks like a great deal. You'll buy these PSUs at cheaper valuation and you will also enjoy huge dividends. Hold on, it is not that simple. If it was that simple, then everyone would have invested in these PSUs. On the contrary, I found that DIs are actually selling some of these stocks. For example, in SAIL, DIs have reduced their shareholding from 16.6% to 8.79% in latest quarter. In HPCL, holding was reduced from 23.6% to levels of 16.4%. Although DIs have slightly increased their shareholding in some of the PSUs. But the question is, if these PSUs are offering such great dividend, then why DIs are not buying them crazily? That too, when they have such low P ratio and available at very low valuation. I tried to have a deeper look into this and share my viewpoint on this video. But remember, this video is only for educational purpose. If you want to learn more in depth about stock fundamental analysis, you can explore my online course that covers everything about money management. Alright, let's get started. Before we even discuss about the individual stocks with high dividend, let me be very clear that dividend yield is dynamic in nature. It changes every single second because dividend yield is calculated by dividing last 1 year of dividend amount with current market price. So if share price of the company increases, dividend yield decreases, and if the dividend amount increases, dividend yield increases. Now there's a big catch with dividend yield and a lot of people fall in that trap. They just look at the latest dividend yield and invest in the stock. However, what they don't understand is the dividend amount is not fixed. It all depends upon the dividends declared by the company. Let me help you understand it with an example. So first of all, dividend yield is calculated by dividing last 1 year of dividend amount with the current market price, right? Let's take an example. Let's say in last 1 year, company has declared a dividend of rupees 10. Now, let's say if the current market price of the company is rupees 100, then in that case, its dividend yield would become 10 divided by 100. So that would be 10%. Now remember that this current market price vary every second. So let's say tomorrow this current market price increases to 110 rupee. If you buy it at levels of 110, then you will fetch a yield of 9.09%. Or let's say if it increases to 125 rupee, then the yield would fall to 8%. And if it increases to 150 rupee, yield would fall to 6.67%. So as the current market price increases, your dividend yield decreases. Likewise, let's say if the current market price fall to rupees 80, then your dividend yield would become 12.5%, right? Then second parameter is the dividend in last 1 year. So let's say instead of 10 rupee, if the company pays a dividend of rupees 12, then your dividend yield would become 15%. Or let's say instead of 12, if the company next year pays a dividend of rupees 8, then dividend yield would fall to 10%. So as the dividend amount increases, your yield increases. But as the current market price increases, your yield decreases, and vice versa. If the current market price fall, your yield increases. Now there is another very important parameter that you should always consider is, let's say the current market price of the company is 100. So let me just mention it here. And once you bought it at 100 rupee, and if the future price of the company become 75 rupee, let's say, in that case there will be a loss in the share price. So how much would that be? So that would be your future price minus your current buying price divided by this. So you will have a loss of 25%. Try to understand this. Even if You invested in the company at current price of 100 and fetched a yield of 8%, but your share price is down 25%. Although of course this is a notional loss unless you realize it. But if you look at net, you lost 25% in share price, you've gained 8%, still it is a loss of nearly 17%. So first of all, be very clear that the dividend yield that you see is for the past. It is not for the future. And there is no guarantee that the company would continue to generate the same dividend yield. In that case, what you should do? You need to figure out whether the company would continue to give the dividends or not. Although you can't figure out 100% whether that company would declare that similar dividend, but at least you can get a good understanding. And for that, you need to look at the dividend payment history of the company. Whether the company is paying the dividend at consistent basis or not, and whether the dividend yield is consistent or not. With this now, let us figure out the dividend history of some of the PSUs and calculate their yield. So this is the dividend amount history of these 5 stocks: NMDC, SAIL, Vedanta, IOCL and Coal India for FY 18, 19, 20, 21 and 22. By the way, let me just quickly show you how you can also identify the dividend amount paid by these companies. For that, you just need to visit Money Control website, and let's say on top you search Coal India. Now if you scroll down, you will find an option of corporate action. So this is the corporate action tab. Just click on this, and here you will find an option of dividends. Just click on this, you can see bonus, dividends, split, everything. Just click on see more. There you go. So if you scroll down, you can see the history of dividend being paid by this company in chronological order. So you can identify what is the dividend company has paid on year-on-year basis. So if you look at NMDC has paid a dividend of 4.3 rupee that increased to 5.5, then 5.3, increased to 7.8, and currently in FY22 it has paid dividend of 14.7. So historically, if you see, NMDC has increased the dividend. Again, there is no guarantee that it would continue to increase. Next, if you look at Steel Authority, it did not pay any dividend for almost 3 years, and in FY21 the dividend was 2.8, that got increased to 8.8 rupee. Next, Vedanta, if you see, it has been very fluctuating. It was 21.2 rupee, then 18.9, then 3.9, then it increased to 9.5, and then increased to 76.5. If you look at Indian Oil Corporation, again it has been very fluctuating. It was 28 rupee, decreased, then decreased to 9.3 rupee, 4.3, increased to 12, and then reduced slightly to 11.4. Similarly, Coal India, if you see, although it is still not that volatile, but still it was 16.5 rupee, then fell down to 13, then 12, then increased to 16 and increased to 17. So one thing is very clear, that this dividend amount that is paid on year-on-year basis is not fixed, it is very volatile. Based on this, if you look at the share price of the company on an average for, let's say, FY 18, 19, that's how you calculate the average dividend yield. So for NMDC, we identified the average share price for FY 18, which was 133, then 107, 104. Likewise, we did it for Steel Authority, Vedanta, IOC and Coal India. Based on this, I calculated the dividend yield on year-on-year basis. Let's look at this. So this is NMDC. It was 3.2%. So this is FY 18, 19, 20, 21 and 22. So last 5 years of dividend yield. It was 3.2%, increased to somewhere around 5% for 2 years, increased to 7.39 and then increased to 9%. Now the reason why NMDC yield has increased so much is there are 2 reasons. Its dividend amount has also increased and the share price has fallen. We'll look at that. Then the Steel Authority, if you see, it did not pay any dividend for 3 years. Then this is increased to 5.38, then increased to 7.7. As far as Vedanta is concerned, although this is not a PSU company, it's a private company, but it pays a good amount of dividend. So it was 7.5%, increased to 8%, then fell down to 3% in your FY20, then increased to 6.46 and then increased to 24%. This is the FY23 dividend yield. This is not based on the latest market price. Next, we have Indian Oil Corporation. Its yield was 6.8%, then 6.3, then 3%, then 13.7 and then fell down to 10%. Coal India also, if you see, 6%, 5%, 6%, 12% and 10%. So one thing is pretty clear, that this dividend yield is not fixed. It is very volatile. Now, but still, one thing is also very clear, that these companies have a history of paying dividend on a consistent basis in last 5 years. So that's a good thing. Now, let us also look at the share price movement of these companies in the past. So if you look at the NMDC share price, look at this. It touched a high of nearly 534 in January 2010, and since then the stock is down 78%. Now, would you like to invest in a company where the share price has fallen nearly 78% in last 12 years on a consistent basis? Well, here again I'm not saying that it would continue to fall, but personally I don't like companies that keep on falling for last 5-10 years. Next, your example of Steel Authority. Likewise, look at this. It increased, it was at levels of 4, then increased to levels of 273, again fell down more than 70% during your housing bubble, again increased to 209%. Then look at this. Since then, the share price fell down 90% between 2010 to 2020. Again, that got increased, then almost 307, again it fell down. So again, it is very, very volatile. And if you look at it in last 10-12 years, compared to that, the stock was trading at levels of 150. Still, look at this. It is down 50% as compared to its last 10 year of share price movement. Next, if you look at Indian Oil Corporation, same story. It increased till your 2017, and then look at this. Share price fell down 66%. Again, it increased, and if you look at last 5 year of movement, still it is falling from highs of 150. The stock is nearly down more than 50%, right? Then same story with HPCL. Stock jumped quite a lot and then fell down, still down 45% since last 5-6 years. Next, if you look at Coal India, the same story. It jumped to highs of 439 in 2015 and it tanked nearly 75%. Although it has been increasing since last few years, mainly because of the shortage in the energy. But if you look at the long-term bigger picture, it is showing a declining trend. Likewise, Vedanta, if you see, it has been very, very volatile. So it increase, then it fall, and then it increase, then it again fall more than 70%. Then again it increased, then it again fell down more than 70%. Again it increased, again it fell down. Again, there's no guarantee that from here it will only going to increase. The point is, these stocks are very volatile, and if you look at the share price movement in last 10-20 years, there's not much movement. In fact, majority of stocks have fallen in terms of share price. We have now identified that these PSUs have a good history of paying dividend on a consistent basis. But the question is, will it continue to pay these dividends in the future? Because it was that easy, then everyone would want to buy these PSUs, and these PSUs won't trade at such low PE multiples. If these stocks are trading at such low PE multiple, then it means investors do not want to pay a high premium for these stocks. What could be the reason? For that, you need to look at the business of the company and its future prospect. Is the future of the company bright? Can the company make good profits in the future to declare dividends on a consistent basis? And what about the share price? Because as we discussed before, if the company is giving 12% annual dividend, but the share price tanked 20%, then it is a loss of 8%. Of course, a notional loss unless you realize it by selling the stock. So the point I'm trying to make is, don't just look at the dividend yield and invest. You should also look at the potential in the business. Because you don't want the stock price to tank 40-50% over the next few years, even though you are getting a good dividend yield. For example, coal is a non-renewable business. Eventually, everyone will shift to renewable sources. So Coal India won't have a long-lasting business. Yes, in the short term, maybe few years, it can rise and fall based on the demand for the coal and share price, but the long-term picture of next 20, 30, 50 years is clearly blurred. Likewise, stocks like Steel Authority can see further correction in share price in the near term as the metal sector is on fall. Since metal is a commodity sector, its price jumped during rising inflation and now falling during falling inflation. Metal sector saw a sharp rally last year when the inflation was rising. But now we are in the phase of controlling that inflation and metal prices are falling. That would directly impact the profitability of metal companies. It means their share price will fall. And if the company is making losses, how will it declare dividend? For example, Indian Oil Corporation has recently declared a loss of 279 crore in Q1 of FY23. HPCL has declared a loss of 8,557 crore. If a company is making losses, how will it pay the dividends? Maybe from the reserves. But is it sustainable? Remember, these companies also have very high debt levels. Now, I'm not saying that you should not buy these PSUs. All I'm saying is, make sure that you understand the entire picture before buying the PSUs. If you are lucky and end up buying these PSUs at lower level, then you can get the benefit of both dividends as well as stock price appreciation. But if you are unlucky and end up buying those stocks at high level, then it will result in overall loss when the share price fall. Personally, I prefer private MNCs that have a decent growth prospect as well as declared decent dividend. For example, ITC is a classic case. Last year it declared a dividend of 11.5 rupee and it was available at levels of rupees 200 with dividend yield of nearly 5 to 6%. Of course, now that the ITC price has jumped to levels of 300, the dividend yield has fallen to levels of 3.7%. Then you have stocks like HCL that have corrected a lot and are available at an attractive valuation with a PE ratio of 19 and also have a dividend yield of around 3.2%. And these are the stocks with a history of giving consistent dividend for many years. Moreover, they are highly profitable business and have a bright growth prospect. So even in terms of share price, they can give good return. I already have created a video on top 5 dividend yield stocks in the past. Do have a look. I hope it makes sense. Do not blindly invest in dividend paying company by just looking at their past dividend yield, and make sure that you know how this dividend yield changes based on the share price movement and dividend amount. Now tell me in the comment which is your favorite dividend paying stock, and if you like this video, do share it with your friends. I'll see you in the next video. Till then, take care.